Thanks, Neil, and thanks everybody for joining me today and joining us for an update about INDIVA. My name's Neil Marotta. I'm the co-founder, president, and CEO of INDIVA Limited. We are a licensed producer in Canada. I know some of you are new to the story, and some of you have probably heard the story many times. So bear with me if you're very familiar with the story, and if you're brand new, we'll try and make sure that you get what you need from this. But like Neil said, I'll go through this pretty quickly in about 15 minutes, and then we'll open it up to Q&A, and we can add more color if there's any clarifications needed. So we are a licensed producer. We are based in London, Ontario. We have a facility that we own. It's fully built, fully licensed, and we are the national leader in edibles production and sales in Canada. We have north of 40% market share in the edibles category. And I'll get into some detail about that. This here on the title page of our presentation, you can see many of the products that we make. So we do focus on edibles. It's about 90% of our revenue to date. But we do make other 1.0 products like pre-rolls. We sell premium flower under the Artisan Batch brand. We don't grow that flower, but we do distribute it. We make and sell Bang Chocolate, Wanna Gummies, Wanna Quick. We're about to start distributing Ruby Jewels. Very excited to have those products on the market. We make capsules, and we also distribute and sell cookies from a partner called Slow Ride Bakery, and those have done very well. So I'll dive in here. This is forward-looking statements that I'll let you read on your own leisure. That picture is from our facility in London, Ontario, where I've been for most of the week. And so we are the leader in edibles. Our market share in October was north of 40%. It seems to be hanging in there pretty steady into November. We're just through November, so we don't have fully updated Hifyre numbers yet, which we lean on. For those that are not familiar with Hifyre, really that is a model that extrapolates data from over 300 stores across the country, primarily in the Ontario, BC, Alberta, and Saskatchewan markets where that data is most reliable. So it's not a perfect source, but it certainly is very helpful in terms of learning how our retail share goes and how our sell-through is improving. We also occasionally refer to OCS data, which reflects more of a sell-in, so what we sell into the DC in Ontario. And OCS, on the OCS last year for their fiscal year, our Bang Milk Chocolate was the #1 selling SKU by units. And in their most recent quarter, I think ended June, we had 4 of the top 10 products on the OCS. So while the edible category is still relatively small, we're doing very well in it. And it does create a lot of velocity, and that's important for stores and for the provincial wholesalers. We distribute now in all 10 provinces in Canada, as well as Yukon, Northwest Territories, and online. We partner with Medical Cannabis by Shoppers, as well as some other medical platforms. And that is actually, unfortunately, the only way that residents of Quebec can get a hold of edibles. They're still not sold by the SQDC. We hope that'll change in time. I'm getting much more involved in lobbying efforts with the Cannabis Council of Canada. The Cannabis Act is undergoing a review now, so we hope we'll see some changes over the next couple of years in terms of potency for edibles, in terms of the per package limits going up. But we also hope that Quebec will see that there's a great opportunity here, to fulfill their promise of ensuring safety in the market and allowing legal edibles. Our growth has been pretty strong. We'll get into some of the revenue charts, and we've got a team of great CPG executives that have really led us to this #1 spot in edibles, and we'll talk about that. Our balance sheet now, our working capital was basically zero at the end of Q3, but that did not reflect some refinancing efforts that were subsequent to quarter end. So our working capital pro forma for the Q3 financing that happened right at the beginning of Q4 would be about 11 million. Our market cap today is about 40 million. The insiders and directors directly and indirectly own about 21% of the company. These are a few pictures from our facility. So that looks like pomegranate blueberry gummies being made, as well as our capsules. We make a hard capsule, which is a 2-piece capsule. It's a little bit unique. Those capsules are considered vegan, so a little bit more interesting for folks that don't want a soft gel, which tends to be made with gelatin. and as a result is not vegan. You can also see our Bang chocolate being made in the molds, as well as some pre-rolls. We do own the building. We bought it about 2 or 3 years ago, and it is fully built out. In terms of capacity, we're probably operating about 40 to 50% capacity. So lots of runway left to grow, and we'll get into that. This is my favorite chart. We've had a pretty good run over the last 7 or 8 quarters, going from well under $1 million a quarter of revenue 2 years ago to the 7 to 9 million range so far year to date. We've given some guidance for Q4. We expect sequential revenue growth to increase. Still too early to say whether it'll be a record quarter or not, given that it's only December 2nd, but we're quite pleased with how the POs have rolled in October, November, and so far for December. We've seen good margin improvement as well this year. That's been driven by falling distillate costs. And, we expect margins to continue to improve into next year. You never really know what's going to happen quarter to quarter as COGS filter through, but we're not seeing any meaningful negative margin impact in any way. So we're very hopeful that even if the contribution from falling distillate costs doesn't help margins too much going forward, we've got other tools. Number one, fixed cost leverage as we continue to grow, and we certainly expect to grow. And number two, we've got some automation that will come online late in Q1 that will help margins next year as well. So overall, I would expect these trends to continue of higher revenue and higher margins. Looking at edibles, given it's such an important part of our business, when we look at mature markets, typically the edible category represents somewhere from sort of 13, 15, sometimes even higher, mid-teens, let's call it, as a percentage of the total market. In Canada, we're still only at 5%. And there's a variety of reasons for that. Certainly potency is part of it. Not having Quebec as part of an available market is also part of it. But we also think that this is just a function of being new. And maybe it makes sense for me to jump ahead 2 slides here, but whoops. You can see that edibles as a percentage of the total market continues to climb. That's a nice steady increase. We like to see that. And, for it to get to 15 or 20% of the market, let's say, that's going to take a bit of time and probably some regulatory change. But I don't see any reason why this category can't double as a percentage of the total market, and say where edibles would be 10% of the total, just based on improved product quality and breadth. Not all the products that are on the shelf are great. Certainly, we're very proud of the market share we've gained with Bang and Wana, which I would consider to be great products. Wana is one of the top selling, if not the top selling gummy in America. And Bang chocolate has been winning Cannabis Cup awards for a long, long time. So this is a big part of our philosophy. Licensing award-winning brands helps drive our business in Canada. Brands tend to go north on this continent rather than south, at least consumer brands. As Canadians, we do a great job of exporting athletes and artists, but consumer packaged goods, those brands tend to go north in this continent. We believe in that quite heavily. I'm just going to back up a slide here. Maybe I'll back up 2 slides just to finish the discussion on edibles. Right now, in the States, gummies and chocolate make up about 3/4 of the market, whereas in Canada, gummies and chocolates are north of 90%. So when I talk about an increased breadth of products, allowing for bigger category representation as a percentage of the pie, that's really what we're referring to, the other category, which should be able to triple while the whole market continues to grow. The overall market through October, we hit a new record. We're annualized at about $4.5 billion of retail sales in Canada. I think that's largely expected to double over the next few years. So maybe the sort of initial hyper growth might be slowing down for the overall market, but the edible category itself also continues to grow, annualized at over $200 million of retail sales, and that's represented by the black bars here. And obviously that chart that I showed you already. We've seen the edible category continue to increase. There's about 2,500 stores now in Canada. We're approaching saturation. Certainly in some local markets, I would argue we're oversaturated. For instance, Toronto, some municipalities still don't allow cannabis retail stores, which seems bizarre to me, but that's the way it is. And then, we've all heard stories of some markets in Toronto having just too many dispensaries next to each other. I think that'll balance out over time, but our store penetration is north of 75%, so we're very proud of that. And we continue to invest marketing dollars at the store level as close to where the purchases are being made. And what I would say anecdotally from the store visits that I do, and I regularly visit stores and chat with bud tenders and customers and hear what they're thinking. What I find is that our artisan batch flower brand is extremely popular with bud tenders. It's a more expensive product, and maybe they get a discount working in those stores. But I went in to inquire about the Donny Burger in a store earlier this week, only to have the bud tender tell me that he'd been using it all weekend. And so that's the kind of feedback we love to hear, and we regularly get that kind of feedback on Bang and Wana, that bud tenders love those products. When a bud tender loves a product, they do tend to recommend it. Certainly, they'll have their marching orders from head office or from the store managers on what products they need to move. But when someone sincerely enjoys a product, and that recommendation goes a long way, and I think it's been reflected in our market share. This is just breaking down this chart, the total edible sales. Again, the other category, anything other than chocolate and gummies, representing a very small amount of the total, well under 10%. We think that's got a lot of growth, and this is partly why we did the deal with Slow Ride to start distributing those cookies. This chart looks, again, using Hifyre data across the big provinces where that we know the data is quite accurate. We rank 11th in October across all the LPs. This is LP by LP, so not consolidated. I think we actually bump up to 10th on a consolidated basis. So even though the edible category is small, because we have such a big share of it, it's actually made us a very important LP in this country. And in fact, when you look at the units we sell a pack of edibles almost every second in this country. That's incredible product velocity. We're probably around 1 million units a month of sales, and across our edible products. But even looking further than that, looking at total units, when you exclude Quebec, where we can't sell edibles, we sell more products every month than any other LP. So I would encourage people to take a look at our market cap, and we'll fast forward to another slide shortly. But our gummy share in October was 45%, chocolate was 34%, and baked goods was about 30%. It's a bit early to look at the Hifyre data for November. Takes a few days for it to pass month end to get fully completed, but I would describe our share as steady into November, maybe with some gains, some small gains on the baked goods side as we expand the distribution of Slow Ride cookies. Our overall market share nationally is north of 2%. And I think if you go back to this Hifyre slide, I think number one is only at about 7 or 8%. So we're very proud of where we've taken this company with organic growth. I mean, it's absolutely worth pointing out when you look on a corporate basis. So this is the slide I'm looking for. We do rank 10th. This chart comes from Raymond James. Our market cap down around the 40 million range, far lower than anybody else in that top 10. I would say outrageously lower than anyone else in the top 10. And we also got here through organic growth. We have not made any acquisitions to gain that market share. So, as a result, I would consider our market share quite sticky on an overall basis. When we look at month to month how companies juggle around, we tend to be very steady. Sometimes we'll fall down a ranking or two because another competitor has had a very big load in a flower, for instance, whereas the edible sales tend to be a little bit more consistent and steady. So we're very pleased with where we sit. And then this is the chart from the OCS that shows 4 of our products, 3 Wana products and 1 Bang product as being the highest velocity SKUs. So again, we're very proud of really how loved our products are. We wouldn't be here without this great team that you see on this slide. If I could highlight anything, it would be just most of these folks, all of them are deeply experienced in their individual fields, whether that's finance, marketing, sales, or operations. But most of the folks here have deep experience with CPG, whether that's with companies like General Mills or Nestle. But many of them also have experience in the cannabis industry to complement that. So we really feel like we've got a great core team with the right skill set to help us scale. And in terms of our overheads, we keep our overheads very low. We're only about 3 million and change of quarterly G&A. I don't see any big reason for that to change, with the exception of commissions that we pay to our sales agency. And that's a single digit percentage of net revenue across most of our sales, not all, but most. So other than that, we think we've got the right team and structure in place to be able to scale both internally with the overheads that are in place, with the team that's in place, but also with our distribution channel being in all 10 provinces and 2 territories. We're ready to launch new products, and we absolutely will. These are our core brands now. So under the INDIVA parent brand, and we do have some products that we launch under INDIVA. I'll just jump right in this. We have pre-rolls, flower, and some capsules under the INDIVA brand. We've launched Artisan Batch. Pre-rolls will follow in Q1. This is flower that we purchased from the top craft cultivators in Canada. So that product is gaining distribution out west. We've just launched in Alberta recently. And we continue to bring more strains to market. And we continue to get better and better at how we package this. So Artisan Batch now comes in a glass jar. We've limited the number of nugs per jar to 5 or 6 tops. We've tried to be much more disciplined now in terms of when we receive product about whether it meets our standards to take to market. So we put that pressure back on the growers, and these are real partnerships. We really want to have growers that are committed to bringing the best product they can. I think the Donny Burger that we just launched came from a terrific grower called Stinky Greens in Beaton, Ontario. And so when you buy these products and when you see them in store, you'll see that the grower is named in addition to the THC percentage. And we also list the terpenes. And I think that Donny Burger came out at 27.5% THC and 3.5% terps. So that is absolutely super premium product in the Canadian market and is priced accordingly. Below these sort of 1.0 products, we've got our 12 Wana Gummy SKUs. The 10-pack Blood Orange has just recently hit in BC. We loaded in, I think, something like 300 cases, and they sold out in 2 days. It's a terrific product. It tastes really great. And we have 4 more Wana Quick SKUs that will launch in Q1, including the eagerly awaited Midnight Berry, which contains CBN, which is very helpful towards sleep and improving sleep. So I would expect strong growth in Q1 driven by those new products. Very excited to get those out to market. The Blood Orange is only launched in BC, and this is where it sometimes is a bit of a nuance that is harder to explain. Not all the provinces have the same methodology of launching new products. So while BC took this product and they've already reordered it, Ontario won't launch this product until January. And that's just a function of how the provinces operate. So we don't always have a fully coordinated national launch. I think that's unfortunate. We're joint business planning partners with the OCS, and we're very important suppliers to the other provinces. And we'll continue to work in the background on coordinating these launches. It's funny, sometimes provinces complain that they're not first to get a product to launch, but it's certainly not because of our lack of readiness. We're ready to take this coast to coast. I'm very pleased to see how these 10 packs are performing as well. Moving on from the gummies, we've got the Bang chocolates. We have 8 SKUs in market. We launched in Q4 the THC white chocolate candy cane. The sales of that product have done very well. It's a seasonal SKU, so I wouldn't expect that to contribute anything to Q1, but that will help in Q4. And we do have new SKUs planned for the first half of next year, 2 more Bang SKUs, and you'll just have to stay tuned on what those flavors are going to be. We're up to 5 SKUs now with Slow Ride. So this is another example. Maybe best to pause here for a second. There's really 3 ways that we can continue to grow top line. One is by continuing to license award-winning brands out of the United States and produce and distribute those in Canada on an exclusive basis. We do intend to continue to pursue more brands, and we do have several companies under NDA that we're in discussions with. In terms of innovation, look, we would love to innovate. I think that's far riskier. Obviously, the prize is greater if you get it right. Once we get to free cash flow positive, I think we'll be far more aggressive at our own innovation, knowing that we can take that risk and we can fund it without having to go to market. And then the third piece, and I bring it up now, pointing to Slow Ride, is by partnering with, let's say, smaller LPs or micro LPs, not unlike what we do with Artisan Batch, where we can buy the product and we can take it to market. The last mile in this industry is quite hard. Having a different excise stamp across 10 provinces and 2 territories makes sure that it's very hard. It is tough to produce at scale when one SKU is really like 12 SKUs. So we can help smaller producers that make the product accomplish that. We can help get listings, and we can distribute products coast to coast. And that's quite compelling for smaller producers that don't have the, let's say, the capital strength or the overhead or the team, to be able to distribute product coast to coast successfully. So I would expect those type of deals to continue. And then last but not least, we're finally launching the Ruby Jewels. Those will be 360-day notice and available to sell in late December. We're hopeful that we'll have some shipments out, and then in Q1 we'll try and take that product coast to coast. The Ruby Sugar and the Sapphire Salt, we're making Ruby Sugar now. We don't have it listed anywhere yet. We would expect in 2022 that will come to market. But there's also some interesting potential for this to be a B2B product. And not unlike what I've just described, working with smaller LPs to distribute their product, we get inbounds now on a fairly regular basis asking if they can buy Ruby Sugar from us to make their edibles. And the answer to that is absolutely yes. And hopefully we'll have some news next year and working with some potential partners on doing just that. This is when I talked about trade marketing and trying to invest our marketing dollars as close to the customer as possible. This is a perfect example for those of you that are in Toronto. These pictures were taken at the Tokyo Smoke at 333 Yonge. We also got a very nice Wana installation at the Tokyo Smoke in the Eaton Center. And I guess if I would guide you to anything is expect to see more of these displays pop up in not just Tokyo Smoke, but in a variety of different retail chains coast to coast. We really think this is the best way to keep the product in front of the customer and in front of the influencers, really, which are the bud tenders. 95% of all sales happen at the store level. The OCS, as an example, is close to 2,000 SKUs, might be more now, listed on their website. Most stores can't carry 2,000 SKUs. Their cages can only handle a few hundred. And of that list, there's going to be a smaller subset even that are actually on display in the store. So we want to be in that top, let's call it top decile of all products listed in provincially that actually do get airtime in the store. And so this is where we'll continue to invest our marketing dollars. We do see an impact. When we do measure this, we see a 5 to 10x increase in retail sales when we have installations. So it does work. I won't bore you with all the corporate development that we've had over the last 5 years, but we have research coverage from Raymond James. I believe they have a buy and a $1.25 target. We have coverage also from Echelon. I don't believe they put a price target out or any earnings estimates, but I would encourage those of you that are out there that have relationships with either of those brokerages to reach out. I'm sure they'd be happy to give you more info. And maybe with that, Neil, I'll turn it over to Q&A.
Yeah, you bet. Great presentation, Neil. There's a few questions on there. You just have to go to the question tab up on the top right there. And
right, here we go. Okay, so question number one. Do you expect to announce any new license relationships like Bang and Wana in the first half of 2022? Yeah, I think the short answer is yes, I expect to. It takes two to tango. And we do have active discussions that we're in the middle of right now. I just can't give you a date. The first half, though, those are wide enough goalposts that I think the answer is yes, and you'll just have to stay tuned to what that might be. Next question. With Canopy buying Wana, do you have any concerns of losing the rights to Wana? Has Canopy approached Indeed with any type of potential deal? I'm not going to comment about our conversations with Canopy, but we obviously do talk to them, and obviously we talk to Wana very regularly. We've addressed this, I think, pretty thoroughly in our last press release and in our conference call. But one more time, we have the exclusive rights to produce and distribute Wana in Canada for the next 3.5 years. That agreement will last until the spring of 2025. In the meantime, Canopy, I don't believe, can exercise their option to acquire Wana. So they have not bought Wana. Maybe that's worth clarifying to begin with. They've bought an option to acquire Wana that is contingent on federal legalization of cannabis in the United States. I don't know when that's going to happen. If it does happen in the next 3.5 years, and Canopy does exercise their option and causes Wana to terminate, so that's a lot of ifs, then we would be entitled to 4 times our quarterly net revenue from Wana products. That's north of $20 million today. And with the amount of new products that we're introducing, like I said, 4 new Wana quick SKUs coming in first half of next year, and with the kind of growth we expect in the overall market for edibles and cannabis, conceivably that payout could be greater than our current market cap. So even the downside's not so bad. So we will continue growing our business. We won't stand still, but we'll keep pushing to grow the Wana brand in Canada as aggressively as we can. Next question. What do you attribute the reason for the stock tumbling? Look, the whole industry has been under a huge amount of pressure, and I think that's what this relates to entirely. We reported our second consecutive quarter of positive adjusted EBITDA, and I would expect that trend to continue. So I don't think it relates directly to INDIVA. I think it relates to the entire sector being under a lot of pressure, and maybe even some tax loss selling here late in the year. Next question. We had a great booth lift show. How did it go? Thank you. Yeah, very proud of the team. We had a terrific show at Lyft. There were very few LPs that actually showed up, and I don't think anybody ahead of us in the league table was there. So I think we got a great reception from all the retailers and bud tenders that did attend the show. It was a very busy show. It was sold out, and certainly a lot of new leads. So thanks for the compliment, Dave. Next question. Does Slow Ride have plans of introducing a chocolate chip cookie in the future? I don't really know. The truth, we haven't talked about one, but they may have one in the background, and you'll just have to stay tuned, Rick. Where do you see the stock price market cap going in the new year? Great question. Here's what I would say. We know that we're very, very close to break even now on an earnings per share basis. The quick math is, I'll give you my real quick math. If we can get to $4.5 million of monthly revenue, that would get us to about a penny of earnings per share on a quarterly basis. Last quarter, we did 7.7 million. The quarter before that, we did north of 9. Not ready to talk about what I expect for Q4 specifically, but I think if we can get to that 13.5 million, call it 50 to 55 million of annualized revenue, which we're really not that far from, we'll do about 4 cents a share of earnings. I cannot possibly imagine the stock is still at 30 cents if we're printing earnings per share, and that's exactly where we intend to go. So, if we had 4 cents a share of earnings, would 25 times earnings be unreasonable? No, I don't think so. So, hopefully the stock is going to track back to $1 when we're reporting earnings, and that's where we hope to get to next year. Next question. We see a bump in share volume traded when someone like Bruce Campbell discusses INDIVA on BNN. That's true, you do. Are there any plans to get increased exposure for INDIVA to market the company to other investors? INDIVA's best kept secret. Thanks, Gord. We're getting a lot more attention now from the brokerage community than we might have. I did about half a dozen desk presentations in Toronto around the timing of Lyft. So everyone sees, that the story is progressing. Certainly, I think we've done what we said we were going to do, and we have a very clear path to profitability, not a muddied promise. So I don't think there's a magic bullet. I really think this is executing on our plan, getting to earnings, and then all of those investors and brokers that like the story will just like it more. So there's no plan to create attention. There's a plan to create earnings. Next question here. Bang is becoming more and more popular throughout the US and Europe. Do you expect sales to increase across Canada, not only because of your great marketing, but also the popularity of Bang around the world? We do expect it to grow. There's a lot of competition. We're maintaining our market share while we introduce new products. We think Bang is a phenomenal brand. I think it's absolutely going to be a global brand in cannabis. So we're very pleased with it. I don't think that alone will drive sales in Canada. I think it's going to require boots on the ground marketing efforts and some investment there, continued new SKU introduction, and continued differentiation. The market will only get more competitive, even if we go through some kind of shakeout in the industry in the next 12 to 24 months. Next question. The $1.25 buyout target seems low considering the other buyouts in the marijuana sector. What are your thoughts? Well, I think everybody on this call would be very happy with $1.25, given we're trading at 30 cents and we went public at 75 cents several years ago. So, in terms of, is it low? I guess it depends on which comp you choose. I think Canopy paid about $400 million for Supreme. That was what, six to 12 months ago now. I can't remember exactly. I would argue, we have every bit as much, if not more, market share now than they had at the time. I think their share has slipped quite a bit. So that would mean the $1.25 is low. But, we try not to sit around and agonize, what's an appropriate takeout target. We're too busy trying to launch great new products. And I think that's what's going to drive the value of the company, not just, what's the right takeout price. Another one here is a follow-up on Canopy. I think I'll want a product in the U.S. other than Colorado's license with INDIVA. So Canopy has the same situation across most U.S. states. Let's say it makes a renewal in Canada as a possibility. Yeah, look, I mean, I don't think it's a fait accompli that Canopy pulls the license. I can't tell you one way or the other whether that's going to happen. I think time will tell. We'd be perfectly willing to continue being the licensee in Canada. But look, I would also argue that part of the reason why Canopy bought Wana is because of the success we've had building that brand in Canada. There's a lot of gummy brands and edible brands out there that they could have purchased. So there are, I think, 12 or 13 licensees in the United States that Wana has. And so I think at the end of the day, it'll be whatever Canopy's philosophy is. And like I said, if anything happens inside the next 3.5 years, the payout that we stand to receive exceeds our market cap. So, we'll just have to wait and see. 3.5 years is a long time in cannabis. Just to put that in perspective, 3.5 years ago, we didn't even have a license to sell anything. So we'll see how it goes. Is there an option or plan for INDIVA to supply, sell Bang and Wana outside Canada, the U.S.? The answer is no. There's no specific option, but the agreements are open to this, and we've had discussions with both parties. Truthfully, international markets are interesting, but not as interesting as Canada. Long term, obviously, the U.S. market is probably going to be 10x the size of the Canadian market. I'm not sure what will happen in places like Germany, or in the UK. Right now, those markets are still very small. And probably too competitive and oversupplied. So it's interesting, and we do think about it, but I would say it's a very small part of what we worry about on a day-to-day basis. Next question here. I know that you're concentrating your business domestically, but any current discussions internationally? Yeah, I think I've just answered that just now, Rick. We do have discussions with our partners about that. We do pay attention to foreign markets. We do get inbounds from foreign countries and from companies that want to import INDIVA products. So I would just say stay tuned. We're, certainly don't expect anything in 2021 as a contribution. And if we do anything in 2022, it's going to have to move the needle. We don't want to ship 20 kilos of something to a country just to say we did. It has to be good, sustainable business. One more question here. Is there anything the company's doing with Bang to protect company against similar issue as a buyout potential? Yeah, fair question. None of our other licensing agreements have any ability for unilateral termination under change of control or any other reason. So the Bang agreement is a 5-year agreement that renews automatically for 3 5-year periods. So that's essentially a 20-year deal. Deep Cell is the same. So Wana was really the only instance, and I guess I would say we took a flyer. I did not think that Wana would get an offer to be bought out so quickly. Maybe we're a victim of our own success, maybe not. But I can assure you that we won't sign any further agreements. That was really an exception we made, and we won't sign any other agreements where somebody could, come in and acquire the licensor and cancel the license. We've certainly gained an enormous amount of experience now making gummies and chocolates in this country. We're great at distributing them. We're coast to coast. So I think if we found partners were unwilling to be long-term with us, we would just go ahead and innovate and do it ourselves. I think that's it, Neil. We've got one other. Someone's anxious.
I believe there's two more. There's two more on the top there. Yeah.
Other questions? Okay, just scrolling up here. I think I saw Dave and Chad's questions. Wait a sec here. Pardon me. Chad's question here. Can you comment further on the termination of the DICAR agreement? The initial announcement said that Sundial's investment would be created by terminating DICAR, but there was some noise about the cost of financing, drowning that out. Yeah, look, I mean, that's all backward looking. It is 100% accretive, and I'll walk you through the numbers. We were paying DICAR about $1 million a month under our agreement. Our product sales, essentially chocolate sales, were covering about a quarter of that. So on a quarterly basis, we were at about $2.5 million that was coming out of pocket. Now, with the refinancing with Sundial, despite the higher coupon on the whole amount, our quarterly interest expense is about $750,000. So that's about $1.5 million of quarterly savings on a cash basis, and that's accrual or cash accounting. It's $1.5 million. So that's about $6 million a year. That's where we see it's accretive, and happy to follow up if you have any other questions on that. But that agreement ran its course. We got out of that agreement. It's been accretive. It served its purpose, and I think we're happy with where we sit now.
Yep, I think that's it. I think that's it, Neil. Thank you, everyone, for all your questions, and great presentation, Neil. The replay will be available shortly after the presentation, and we'll load it up on our YouTube channel as well. Thank you, everyone, for joining us, and happy holidays. Thank you, Neil.
Okay, thanks, everybody.
Thank you, everyone.